Hello everyone, in this session we will conclude our journal chapter. So today I have picked two questions from your practical question. First question is question number 24 and second question is question number 27. Now let us see question number 24 first. Now the question says journalize the following transaction in the books of Kanishk traders. That means we have to write journal of Kanishk traders at the top of the format of our journal. Now the first transaction, it said that sold goods costing rupees 1,20,000 to Charu at a profit of 33.1/3% on cost less 15% trade discount. Now this 1,20,000 given is cost price of the good. So in order to find out selling price, as we write only the selling price in our journal entry, we have to add this 33.1/3% of profit into this 1,20,000. Now let us see working note. Now cost price of the goods, we know that it is 1,20,000. Then at that we have to find out and add profit of 33.1/3% of 1,20,000. Now 33.1/3% of 1,20,000 is rupees 40,000. So when we add this cost price and profit, we will get our selling price of rupees 1,60,000. In the question they said that there is 15% trade discount as well. So we will deduct trade discount, that is 15% of this 1,60,000 is 24,000. So sales we got 1,30,000. So for this journal entry will be Charu account debit to sales, since they haven't mentioned whether this sale was cash or credit, so we will assume that this sales transaction was credit. So we will write Charu's debit to sales account, and total amount we will write the selling price after deducting trade discount, so 1,30,000. Then next transaction, it said that sold goods costing 80,000 to Arun against check, means we sold goods and in return we have received check, and in this transaction amount of profit is 25% on cost, then there is 15% trade discount as well. So first we will write cost price of goods, that is 80,000. Then we have to find out this 25% of 80,000, it is nothing but 20,000 rupees. Then we got selling price of rupees 1 lakh. Then we have to give trade discount of 15%. 15% of 1 lakh is 15,000. So when we deduct this 15,000, we got total sales of rupees 85,000. So our transaction will be bank account debit to Arun. We wrote bank account because in question they said that we received check, okay, and since they haven't mentioned about depositing that check on that similar date, or they haven't given us any other transaction related with this check, so we will assume that the check was deposited on the same date. So when we deposit check on the same date, then we will receive money in our bank account. So we debited bank account to Arun and amount will be 85,000. Then the last transaction is paid by check rupees 8,400 as insurance premium for a period of 12 months. Now this 8,400 that we paid for insurance premium is for 12 months, that is for 1 year, but this year started from 1st August 2016, okay. And another piece of information that we got from this transaction is that our financial year closes on 31st March of every year. So that means that the insurance premium that we paid from 1st August 2016, it includes some amount of next financial year as well. So that we have to find out. Now this 8,400 that we paid as insurance premium, it started with 1st August 2016 and it ends on 31st July 2017. So that means that some months of 2017 was included as well. So when we look at the working note, we wrote insurance premium for 12 months, it was given 8,400 in the question. So in that manner, insurance premium for 1 month will be 8,400 divided by 12, that we got 700. Now since our financial year ends on 31st March every year, so sorry, when we look at the question, this is 1st of August. Now our financial year started from here and it ended on here, that is 31st July 2017. Now in somewhere in between our financial year got over, that is on 31st March it got over. So that means this extra portion is our prepaid insurance premium. We paid in advance for next financial year as well. That means from 31st March 2017 till 31st July 2017 is our prepaid insurance. Okay, so our prepaid insurance will be from April 2017 to July 2017, that is for 4 months. So for 4 months insurance premium amount will be rupees 2800. So that means we have paid this 2800 of insurance premium in advance. Now for this transaction number 3, we have to pass 2 journal entries. First entry will be on August 1st, because on August 1st we paid insurance premium of rupees 8400. So for that we will pass 1 journal entry, and the journal entry will be insurance premium account, since this is a nominal account, and according to nominal accounts rule, debit all the expenses. So that's why we debited insurance premium account. And since we paid that amount by check, that means money will be deducted from our bank, so we credited bank account. So amount will be 8400. Now when the financial year closes, that is on 31st March 2017, we have to pass journal entry for those advance payment of prepaid insurance. So journal entry for prepaid expenses are prepaid insurance account debited to insurance premium account. So amount will be 2800 that we paid in advance. Okay, so I hope this question was easy for you. Now let us move on to next or last question of our journal. This question is question number 27 from your practical question. Now before starting this question, I would like to explain what is meant by this VPP. VPP is nothing but value payable post. Sometimes what happens is that when we order some goods from our supplier, instead of sending through transport, what they do is that they send it through post office. In that case, as a buyer, what we are supposed to do is that we have to go to the post office, we have to pay the amount of purchase, and then after we can take goods or the things that we have ordered from our supply from post office. Now that is nothing but known as VPP. Okay, so in first transaction, the question it's given is received a VPP from Mohan Lal for rupees 25,000. That means we have purchased goods worth rupees 25,000 from Mohan Lal, and in order to collect those goods we have sent a peon, and that peon he had paid rupees 200 for cartage, means for carrying those goods from post office till our business shop or go down. So for that journal entry will be easy. We will write purchases account debit, since we paid that 25,000 worth of goods we purchased, so we will write purchases account debit. Then in the peon he had paid 200 for cartage, so that also it is an expense for us and it is a nominal account, so we will debit cartage account to cash. Since we paid all the amount in cash, so we will credit only cash account. So altogether we got 25,200, and in the narration you can write VPP received and paid cartage. Then next transaction, they say that received 1,000 from sales of old newspapers. That means some old newspapers were kept in our business, we sold them and we received 1,000. Then some old chairs was also there in our business, and after selling them we received 5,000. Now remember that this selling of old newspapers and selling of old chairs is not our business, so we cannot write sales account. Sales and purchases account are always used when we sell or purchase our regular goods that we deal in our business. So in this case what we will do is that we will write cash account, since after selling we got cash. Then for old newspapers we will write miscellaneous expenses, income. Okay, so we will write to miscellaneous income since it is a nominal account, and according to nominal account, credit all income, so we will credit miscellaneous income account. Then for old chairs, since these chairs were our furniture, so we will credit furniture account because we are selling furniture. So altogether we got 6,000 cash after selling those old newspaper as well as furniture. The next transaction, goods given away as charity costing rupees 7,000. That means 7,000 worth of goods. We took it out from our business and we gave away those goods as charity. So we will debit charity account debit to purchases because goods that we used to deal in our business regularly were given away, so we will use purchases account. So since charity account is a nominal account, and according to nominal account, debit all the expenses or loss, so we will debit charity account to purchases account rupees 7,000. Then next transaction, received cash from a debtor written off as bad debt last year rupees 20,000. Now one of our debtor became insolvent and we wrote his account as bad debts last year, but in this year he became solvent and he paid us our 20,000 rupees. So in that case what we will do is that since we received cash from him, so we will debit cash account and we will credit bad debts recovered account rupees 20,000. Then next is sold goods costing 50,000 to Ashok on credit at a profit of 20%. That means this 50,000 is only cost price, so we have to find out selling price. Then selling price we can find out by adding 20% of profit into this 50,000. So 20% of 50,000 is 10,000. So when we add 50,000 plus 10,000, we will get selling price, and journal entry will be Ashok debit to sales, since they have clearly mentioned that it is a credit transaction, so amount will be 60,000. Then next transaction, sold goods costing 1 lakh for 1,40,000. Now this 1 lakh is only the cost price, and in journal we used to write selling price, so we will write 1,40,000, but they haven't mentioned whether this transaction was credit or cash, but they haven't mentioned any name of any particular party to whom we have sold goods, so we will consider it as a cash transaction. So we will pass journal entry as cash account debit to sales, and amount will be 1,40,000. Remember, in journal we used to write only selling price. If there is any trade discount, then after deducting trade discount we will write selling price, but if there is no trade discount, then what we will do is that we will add profit into the cost price and then we will write in our journal. The next transaction number 7, provide 50,000 as interest on capital, means we have to pay 50,000 as interest on capital to the proprietor. So for that, entry will be interest on capital account debit to capital account. Amount will be 50,000 as given in the question. Now some journal entries you have to by heart if you are not able to understand those transactions. Okay, then next is paid rent of building 60,000 by check. Now this 60,000 is rent for whole building, but they have also mentioned that half the building is used by proprietor for his residential purpose. That means it is for his own personal use, not related with the business. But since we have paid the rent through check, that means this 60,000 was taken out from our bank account, so we will credit bank account with 60,000. Now since they have mentioned that half of the building was used by the proprietor for his personal use, that means that half of 60,000, that is 30,000, will be his drawings. So rent account, for that office part we will write 30,000, and for his residential purpose part we will write drawings account rupees 30,000. Then last transaction, outstanding salary at the end of the year is 30,000. So for outstanding expenses, what journal entry we pass is that salary account debit to outstanding salary rupees 30,000. Now these were the two last questions that I wanted to discuss with you, and I hope all the other remaining questions you can try for your practice. And from our next session we will be starting GST and how to pass journal entry in case of GST. Okay, so for this session we will wind up here. Thank you.